Invicta delivered a steady set of interim results despite a challenging operating environment. Core operations remained resilient, with focus on streamlining operations and bedding down recent investments during the period. Invicta CEO Steven Joffe joins us now to unpack that performance. Steve, thanks so much for your time today. Now, to what extent is Invicta's improved performance driven by management execution versus an improvement in sentiment in sectors like manufacturing and automotive?
I think we're very much part of the broader economy, and although we work really hard with our whole management team and everyone at Invicta, at the end of the day, we're in the ocean together with everyone. So we do want to see better economic conditions, throughout for us to really thrive. But having said that, we really felt that we delivered robust results. We managed to increase our revenue by 6%. Mm-hmm. We maintained our GP percentage at 32%, and we had strong cash generation. We basically improved our headline earnings per share by 15%, mm-hmm. and our sustainable headline earnings per share by 19%. And we continued with our geographic diversity strategy and disciplined capital investments, and we managed to buy a business in the UK, and we managed to buy back. So yes, we're in a tough industrial environment, and we continue to be in that environment, but we are definitely seeing early signs of encouraging levels of activity, especially in the mining industries.
Yeah. And, just on the back of what we're seeing in South Africa, there aren't just risks here at home, there are also risks in some of the other markets you operate in. I'd like to know how Invicta is using diversification to hedge against those risks, given the current macroeconomic environment. We can talk about the US, facing tariffs, China also dealing with those tariff dynamics, the UK in the meantime dealing with really slow growth.
Yeah, I think you summarized it so well. I don't think it's necessarily so rosy anywhere else. And in our own South Africa, at least we understand the playing field the best, and we probably make the smartest investment decisions in our own backyard. I mean, I just want to tell you one story. It's not quite relevant now, but it happened to us about 2 years ago. Mm-hmm. We must have about 50 of our top management and all our consultants, and we do this risk assessment. And we have our top 100 risks. We just finished the report, and about 3 days later, Russia invades Ukraine, and our warehouse was now part of Belarus. Not one person out of every of these 50 people, including me, had put the possibility of Russia invading Ukraine onto our list of risks. And that's, I think, the issue when you go into these foreign jurisdictions. You often just don't know what you don't know.
Yeah, that makes so much sense. That's an interesting tale to tell, Steve. I want to talk about your acquisition strategy. You've been very aggressive on that front, and you touched on the acquisition in the UK. Spalding's already contributing to revenue and a profit. What's the strategic value proposition of that business in your broader business of Invicta?
Well, 5 years ago, we set ourselves the objective of having a diverse group with about 50% of our revenue derived from offshore. Mm-hmm. And last year in our results, we achieved that already. So we're very proud of the diversity in our group, with rands and dollars really making up half and half. And then we've been on the hunt for an agricultural business for some time. As you know, like a few years ago, we sold our South African agricultural business back to CNH, the OEM that was, that we used to represent. And we've been looking on the lookout for an agricultural business, and we found Spalding's from a person who sold us a business previously. Now, it's a 70-year-old business. It's a trusted business. It's selling world-renowned brands and of culture and ground care. And it will be, it's a well-managed business, and it just fits in so perfectly to what we like to own.
And is there appetite for further acquisitions? I think the last time we spoke to you, you did mention that there's appetite for acquisitions in South Africa.
Well, we're so proud of the work we've done in reduction of debt that we're pretty much when we go through these results, we're pretty much in a position where we have very little debt left.
Yeah.
And it's put us in a position that we are able to make an acquisition, and we are absolutely looking for the right thing to buy in South Africa. So, we've got one or two things that in mind. and hopefully they'll come off. They really will be like a wonderful addition to our portfolio.
A measured approach when it comes to those acquisitions, Steve. Now, with a solid balance sheet, you just talked about how you are sitting pretty, you've managed to lower debt. Take us through the outlook for the second half of the year, especially as those risks are still at play. Invicta has continuously highlighted currency risks as well as supply chain dynamics, which have been hindering the group. Just walk us through how you've been dealing with that and what your outlook is with that in play moving forward.
So we continue to hedge all our rand exposure, and we'll probably continue with that strategy. We don't currently hedge our dollar exposure, and what's been interesting in this 6 months is the rand appreciated 5% against the dollar, and the Singapore dollar, which is our K&M business, appreciated 4% against the dollar. So this 6 months, we were on the wrong side of the currencies. We'll probably continue with that strategy, and just continue with our prudent approach to logistics as well. And by that I mean we probably have a little bit extra inventory in our warehouses to deal with some of the logistic problems that we may face. Because the last thing we want is to disappoint our customers and not have the stock when they need it.
Yeah.
So we've probably been in a fortunate position of having a strong balance sheet that we're able to hold a little bit extra stock.
All right, let's leave it there. We'll catch up with you at the full year period next year. That was Steve Joffe, CEO of Invicta.